Okay, today's presentation is going to be quite short. For some reason, I could not get the full report of the account to share it with you today, but hopefully we're going to share the 2 weeks together in the next Monday. The topics we're going to be discussing today is pulling back the average price, how EazyBot is pulling down the average price, and closing this trading cycle on a lower price than the initial one. And we're going to see one example for that. And the last thing we're going to look at is the take profit retracement. Let me just, before we get in depth into this, explain to you a bit for the new people of what I'm talking about when I say pulling down the average price. Now, based on our experience in the last year, the market have really went down, and then we end up stuck and not knowing what to do, because we were just in the mercy of the market, hoping that the market is going to come back up again and then close the trades that were opened at the top of the market. So the way we designed the EazyBot strategy here is that even if the market goes down and stays down and never come back up, still EazyBot is going to be closing the trades which were open at the top of the market, at the bottom of the market, and still make profit and bring back all the USDT, the dollar value amount that you have used for trading, plus the profit that you have made. And we have shared a couple of examples, and I will share one example here on this topic here that we're talking about when we talk about the closing trading cycle at a lower price than the initial one. And pulling down the average price is that we're going to see a live example of a coin that where we started trading up here, and now the market is down there. And the average price, I mean, the top trade break-even point is down there, closer to the market price, and it will keep on moving until it closes eventually with a profit. And then take profit retracement. Take profit retracement is basically a way that we programmed into the bot to follow the market price. If the bot initially has been programmed to sell or to make profit on 1.5%. However, it had a feature that calls take profit retracement. Take profit retracement will help in case of the market, if the market is moving high faster. So instead of just taking 1% or 1.5% profit, it actually could take up to, I don't know what can I say, but it would just follow the market to the top of the market. And then when the market starts moving down, it's going to close that trade. Let me just show you that in graphical way, so that it would be more clear. Let's say this is the market axis, this is the price, and this is the time. Let's say a trade started here at this point. Yeah, let's say a trade started here, and then the market went up. So the bot is programmed to close the trade or to take profit at the start the process of taking profit at plus 1.5%. But this is not the end of it. What if the market is just shooting high and moving up dramatically? So what do we do? Why should we close the trade here? Why don't we close it here instead of closing it as low as here? So this feature will help us to do that. The take profit retracement, before it closes, once it reached 1.5%, the market has to pull down or have a retracement of minus 0.5%. And that helps us to follow the highest market value that it reached to, or the highest price. So once the price reached 1.5%, then that imaginary line below the highest price starts in play, and then it waits for it. So if the market goes up, it's going to still wait for it to move down by 0.5% from the highest point. So if the market is doing this, it's going to be following the market until it starts moving down. Once it moves down minus 0.5%, then it's going to close here. And this here could be as high as 10% and could be 15%. We have seen one of 14% recently, which I shared previously. So we will see one example like this. And let me just get into the presentation and get to the pages one by one. Okay, so the first one, pulling down the average price, which is basically pulling down the top trades to be closed at a lower market position. This is last week on 5th of August when we shared this coin. This is the same AAVE that we have been sharing since the beginning. And as we have seen, this coin have started on in April on when the price of this coin was 251. So last week, the average price was pulled down to the price of 161. So the trade which was opened at the price of 251 is now combined with other trades is at the price of 161. So that means the price of this coin doesn't have to go all the way up to the initial price of 251 plus 1.5% to start taking profit. However, it just has to cross this new average price or the break-even point of 161 plus 1.5%, and then start the process of taking profit, as I explained it earlier, based on the take profit retracement. So this is last week, and this average price will keep on moving down using the trades on the bottom of the market. It will keep on pulling that average price down. So previously, last week on 5th of August, the average price was 161.3, as we can see here. And the average price have dropped by 89.7 USDT or dollars down. And the profit that it had made while the market is going down is 1,125. Now, or today, based on today's market price, today's market price is 94, but that doesn't matter for us. What matters for us is the average price. During this week, there were many trades happens that increased the profit from 1,121 to 1,171.41. That have helped also our average price to move down from 161.3 to 159.7, as we can see here. And that means our trade or our average price have already moved down below the initial price by 36.37%. 36.37%. That means this specific trade or trading cycle has the potential to close and make profit 36% below the initial price. But even though right now the market price is as low as 94.7, so the price might not go even up to 159 yet. That's absolutely fine. As we have seen from last week, the average price have moved down a bit. Next week again is going to be moving down and down and down until eventually what's going to happen, one of the two things is going to happen. Either the market goes up fast and close it at this point, or the average price will be pulled down to the current market price, wherever it is, and then goes plus 1.5% and close the whole trading cycle, bring out all the money that have been traded, plus all the profit that is being made, which is 1,171, plus whatever is being made on the way and on closing the last trade. So this is about pulling down the average price. Take profit. Well, this shouldn't be take profit retracement. This should be talking about closing the trading cycle at a lower price. Let me just correct that as we're here. Yes. Okay. So looking at this trade, this was on closed on 9th of September. That means 3 days back. So when it started, this trade have started when the price of this coin, this is CRV, by the way, started on 15th of August when the price was 1.442. Right now, it's closed at a price of 1.222. What does that mean? Let's analyze here down there. So the session have started at the price of 1.442 and then closed at 1.222. That means it closed at minus 15%. When we calculate the difference between 1.44 and 1.22, it's 15.25%. So what happened here is that this trade opened here, the market went down 15% or more, and then it closed at 15.2% down. This is a short cycle, and on the way, it made a profit of 3% on the capital of 1,000, because in this coin here, we have traded 1,000. Now, let's look at the take profit retracement. This is what I've just explained in the whiteboard, is that the bot starts a trade here, and then if the market goes rapidly up, it's not going to close it at just 1.5% or 1%. Goes 1%, 1.5, and it goes down 1.5%. If it goes higher, it's going to close it higher. And this is a clear example for that happened last week. So this trade opened here at this place. I just made the candle to the bigger this time so that we can see it. So it opened here, then the market started fluctuating, going down and going down. At this point, the market started shooting up. When the market started moving up higher, then it reached to the highest point, and then when the market started moving down, having the retracement of 0.5% or more, and then it closed here. Instead of just making 1%, it made 3.18%. And we have seen other trades that have actually closed in much more than this, in like 14% and 10%, more or less as well.